Welcome once again, guys. In today's video, I'm going to be discussing with you a strategy that has a very high win rate when it has been used correctly. Many people struggle to be profitable in trading, but I can tell you that knowing about this strategy can help you overcome your loss in the market. So stay to the very end of this video, because I'm going to show you everything you need to know about this strategy. And please, before we go to the video, do us a favor by liking the video, subscribe and turn on the notifications bell to get notified when we upload a new video. Without any other delay, let's dive into the video. The strategy that I'm about to share with you is based on three indicators, which are Diddy Index, the Kijun and the relative volatility. To add these indicators to our chart, let's navigate to the indicator search bar. And then we are going to search for the first indicator, which is Diddy Index. Select this one made by Everjit. This indicator will help us to find the strength of the trend. The Diddy Index was created by Brazilian billionaire trader and analyst called Diddy Aguirre. And this indicator is also known as Brazilian Moving Average. So let's talk on how this indicator works, but before that let's set the indicator for more understanding of it. Then we go to the indicator setting on the input setting. We set the short length to 5. The medium length to 15, and the long length to 30. Then go to the style setting. There, only set the media line to white for clear appearance in the chart, and leave the style setting to default. So let's talk on how this indicator works. The green line of indicator is the fast line, the red line is the slow line, and the white is the zero line. So when the fast line, which is the green line, cross under the zero line, and also diverging the slow line, which is the red line, it will print a red point, which signals us that a new downtrend is about to start. And when the slow line, which is the red line, cross above the zero line and also diverging the fast line, which is the green line, it will print a green point, which tells us that a new uptrend is about to happen. For instance, you saw that the fast line has crossed under the zero line and also diverging the slow line, and it has printed a red point. Then you can enter sell trade targeting 2:6 risk to reward ratio. And if you miss this trade, you can also have enter a buy trade. When you see that the slow line has crossed above the zero line and also the slow line has already diverged the fast line, printing a green point. Notice that when the fast or slow line diverges each other and starts to contract and is moving in a chirpy way, also will be price moving in a chirpy way. And when the slow or fast line diverges each other and start to expand, it also shows us that price was trending. Understanding how the first indicator works. Let's add the second indicator, which is Kijun. To add the indicator to our chart, let's navigate to the indicator search bar. There we are going to search for Kijun. Select this one made by Erwin Beckers. The Kijun indicator will help us to confirm a trend. But before we talk on how it works, let's set the color of the indicator for clearer view in the chart. Then go to the indicator setting. On style setting, change the color to any color of your choice, but here we are going to select yellow for clear appearance on the chart. On how the indicator works, when price is on downtrend, the indicator will be above the candle. And when price is on uptrend, the indicator will be below the candle. And also when the indicator is above the candle, it serves as resistance, and when it is below the candle, it serves as support. For instance, seeing that the candle is below the indicator, and when it's bounced on the indicator, you can enter a trade. Immediately after the close of the bearish candle that bounced on the indicator, targeting 3:9 risk reward ratio. Now let's talk about the third indicator. First, let's go to the indicator search bar. There we are going to search for relative volatility. Select the one made by Verific. Then we go to indicator setting. On the style setting, we are going to uncheck the first three filters and press OK. This indicator helps us to measure the volatility in market. And it has two components, which are the candles and the moving averages. How this indicator works is that when price is on downtrend, it is going to present us with a big red candle closing above the moving average, which tells us that there is enough volatility to move down. And when price is in uptrend, it will present us with a big green candle closing above the moving average, which tells us that there is enough volatility to push the price up. On understanding on how all the indicators works, let's see an example on how we can enter a trade using them. Here is on Soluna USDT on 4 hours time frame. Seeing that the fast line, which is the green line of the Diddy index, has crossed under the white line and also has diverged the slow line, which is red line, and it has printed a red point, and also that the line is expanding. And on looking at the chart, we notice that the Kijun indicator is above the candle, and also that price has bounced on it, which signal you that price is about to go downwards. Then we look at the relative volatility to know if there is enough volume to push the price down. On checking it, you can see that it has presented a huge red candle above the moving average. Then we can enter a trade targeting 1:9 risk to reward ratio. Let's look at another example. Here is on Soluna USDT on 1 hour time frame. On the Diddy index, you can see that the fast line has crossed above the zero line and has diverged the slow line, which printed a green point, also that it has started expanding, which signals us that price is going up. And looking at the chart, you can see that Kijun is below the candlestick, which tell you that price is going up. Then we check the relative volatility to see if there is volatility in market to push the price up. There we can see that there is a very huge green candle closing above the moving average, which tells us that there is enough volatility to push the price up. Then we can enter a trade, setting our stop loss below the recent low and our take profit to the next high. As we come to end of the video, share to us your question on the comment section. We will be glad to answer them. And please remember to like, subscribe and turn on the notification bell to get notified when we upload a new video. Thanks for watching. See you on our next video.